Good evening everyone. This is the third video I'm making today, and in the previous two videos I had not mentioned about myself. My name is Venkatesh Murthy, and I've been trading for 20 years, and I don't use any much of the indicators as we see, like RSI, trend analyzer, or MACD, or any of these kind of indicators. I will tell you why I am not using all these things, because this actually predict the past and not the future. See, for example, this indicator is not even close to this candlestick, this green color. Okay, and in my previous video I mentioned that why we should be buying here and why not we should be buying here and why not here. The reason is there is a gap up. It could open here, and somewhere it is opened here, and there is a downside push, and from here again it is going upwards, again it is coming down. In the same candle there is a movement of 176 points in Bank Nifty after opening. So 176 points is close to 0.5%. 176 points can give us huge money. And the second candle is again 144 points. So 144 on 176 is almost 325 points. 325 points in one day is a huge trade. And when we get this kind of opportunity, it is very easy to trade. It is not difficult, because unless you identify the correct trend and the correct direction in which you are taking the trade. See, this is the plain chart, whatever you call it. I call it a plain chart. And once the market is here and it jumps, it clearly indicates that there is an uptrend. It is not necessary that once the market opens people have to sell it. It is not necessary, and it can be only confirmed. We cannot guess any action of the market, and it can sell down and it can go up, push it up also, but however we have to confirm it. I will show you how I confirm it myself. I never take trade here. This is a very tight zone where there is no movement of anything whatsoever. There is a movement of only around 250 points, and it is a very volatile market after it reaches this point. And what is going to happen tomorrow, we shall discuss about that also. So I will go to whatever charts I am using. I use this order flow charts which I have kept already open for the day, for the previous trading session, that is yesterday. So I was telling you the first candle, as I told you, is very big and it consists of 175 points. See, the second candle, you see it's a green candle which closed, but internally it is actually red, because we calculate the minimum delta, maximum delta, and the delta itself. Delta is nothing but the difference between the sellers and the buyers. The difference between the sellers and the buyers is 3,41,000 in the first 5 minutes. See, as you can see here, I will zoom it a little so that you can see, have a better picture. See, the selling point, sellers are 2075 and the buyers are 3,35,000. You might actually see a lot of red here, but it could be limit orders or something else. But this is 2075 and this is 333,550, that is 3,55,000. So I keep going by the delta. This is the cart and this is the delta. Delta is 341,551. This is a very positive delta, and The next candle itself we have got 60,000 positive delta, and next candle we have got 10,000 positive delta, and thereon it goes on reducing and goes on negative, and from there it goes on negative positive negative positive, which does not have a very strong moves like the first candle. The first candle is first and the second candle are the best candles to trade the opening market open. Otherwise you can trade for 50 points here and there, but it is not genuinely worth your time and money. So see, as you see here, there is only sellers, only buyers, 20,325 lots, 4,726, and you can also see 11,000 only sellers, but this is not gone down below this because this is not fully executed. And again on the top there is 7,000 which is untouched. So this point what we see is untraded zone or the traded and again pushed down. So the market is the first candle is unsecure, and the possibilities of visiting both sides are more because it is unsecure here too and unsecure here too, but the trend is on the upside and the unsecurity on the upside is less. So we take the trade somewhere here, where if the market opens here, probably we'll take a trade here or here, somewhere here in this zone. Although we can time the market, the first 5 minutes is very rapid and it moves up and down very fast. So you should be precisely knowing which direction you take the trade, because it is 175 points in the same candle and 164 points in the next candle. So it might give you a little bit of time in between. Sorry, I didn't take the 5-minute candle, I took the 15-minute candle, but it is the same. First 15 minutes is the trade. There are so many other technical things which I will make you people know, and one more important thing is, don't try to trade on every day. Like as soon as the market opens, don't rush into take positions and get into a loss. This is the 5-minute candle. So what you are seeing here is a very bullish sign. I will give you reasons of what is bullish in this in my later video. This is the continuation of the second video, and in this video I am mentioning why I took a trade, because this is a very bullish sign which is not visible in the plain candle chart. This okay, I will click on the October futures, and the plain chart looks like this in a 5-minute time frame. This is what we were talking about. This is the no trade zone. This is the trade zone, and the trade is over in the first 20 minutes, and we reach the highest point of the market, and from there on it moves on a sideways basis. So in depth when we cover, I want to show you that this is the reason why I took the bullish stand, there are 20,300 lots, 4,500 lots, which is bigger than 11,000, and that is why I took a stand here, so that the market will be pushed upside. And from there again, from the second candle, there is 13,600, 4,700, which is a very bullish sign. And I will again tell you what is very bullish about this. It is similar to this, but it is opening above this closing. This closing point is here, lesser than this opening point, and the same is not happening here. So there is a consolidation or a sideways movement, and after that we can watch where this opens, and still we can take a trade if this opens above. This is the open, so it is opened here. If it is opened above the previous closing candle, we can still take a trade, and same continues till the last candle where there is a dip. Okay, I think I have given satisfactory reasons as to why I took a trade in the opening market, and step by step on a daily basis, I will be teaching you how to go on and catch the biggest rally on intraday basis. And these chances might be available and might not be available sometimes on a daily basis, but we have to wait for the chance. And once we get a chance, we get big chances like this. We don't get 350 points on a daily basis. Although there is some movement, a 300-point movement, you won't be able to catch it, because there will be no substantial support for you to take a trade. However, I will be closing this video. And again, I reiterate not to take any trades without any confirmation, looking at the plain candle chart like this, because this is all deceiving. This is a false breakout, what you see here. This is a false breakout again, what you see here, and it is consolidating all the way. So you might catch a 50-point rally here, but it is very risky to trade here unless you get a confirmation. There is no confirmation, any kind of confirmation in these 2, 3 candles or 4 candles. So, however, there is a pure confirmation on these 4 candles. So that is why I took a trade. You can, if you have any questions, you can ask me in the comment section, and I will be glad to reply. Okay, good night, and have a nice day.